We are delighted that you're joining us for another podcast of Wake Up Aligned, and it is the podcast for chiropractors where we get to talk about chiropractic lifestyle, and topics of interest. You can contact us through our email, and that is mailbag@amcfamily.com.
All right, well, welcome back to another episode of Wake Up Aligned. I am your host today, Tom Owen. My typical partner in crime, Dr. Shannon McMurtry, is not going to be able to join us today, but I have got another opportunity to have my good friend and Vitalleo CEO, John McGuire, is joining us today. And obviously, we've had John on the show before. A lot of you know his background, the expertise that he brings to the table. And I asked him to join us today for the reason or the purpose, since we're kind of, in around the beginning of a new year, talking about knowing your numbers. So if you're wondering what in the world is today's episode going to be, because we cover a wide range of subject matter, because this is for the chiropractor. But chiropractors need to understand that, you're also a business owner. And if you don't stop, you can get lost in the philosophy. Philosophy is good. Technique is good. Marketing or components of that is good. Patient retention, patient management is important. All of those things are a piece of the pie, but one piece of the pie that really gets left off a lot is really learning to be the CEO of your business and knowing your numbers. I find that inside of AMC Aligned, a major problem is how often people do not know their statistics. I can use terms sometimes, especially if I go to a school or, some graduates, and I'll use the term PVA, and they have no idea what in the world PVA stands for. And if you don't know your PVA or your PVC or your MAPS, things of those stats, you're lost. So I really wanted to, I know I've done this. I know Dr. McMurtry and I on various episodes have talked about statistics and what those stats tell us. Not so much going into that, because I want to look at it from a different perspective, from just a holistic business perspective, John. So first of all, John, welcome to the show. Glad to have you back. Always enjoy these times when we get to have conversations. A lot of you don't know mine and John's history. When I moved back to Florida, we connected, and John and I would literally get together at least once a week, and we would go to one of our favorite establishments, Colhane's Irish Pub, and John would, what's that dark drink that you have there?
Well, I don't frequent those places too much, Tom. So
whatever. Whatever.
I'm a big fan of what's called a blacksmith.
A blacksmith,
which is a Guinness Smithwick's mix. And in case the listeners are wondering, I am half Irish, so I do have a tendency to
only the good half.
Like a little bit of the Irish heritage. So I do enjoy the food and festivities there on occasion.
So I think what was that beer that you got me on? That 10 years ago, he got me on that harp. And
harp, yes.
Harp is
good traditional Irish beers.
Yeah. So anyway, John and I would get
There's no
together.
White Claw here.
There's
no White Claw in this room. This is just traditional.
No, we don't do that. But with that said, we would get together about once a week, and we just really enjoyed comparing notes from a business perspective, and just went, those were some of my favorite moments. But we would always come back to knowing your numbers, and statistics and things of that nature. So that's really what I wanted to unpack today. So, John, let's jump in there.
Sure. Yeah, I think, it's imperative for any business owner, and chiropractors, whether you realize this or not, you are a business owner. I think too many times the focus is entirely on the patient, which is fantastic, but you are a CEO, you are an entrepreneur, and you are a business owner. And being that you are those things, it's imperative that you have an understanding of how your business is doing financially. Now, whether you're doing this in-house with a staff person or you have an outside party helping, I think either one is great. But it's important that you have a knowledge of exactly what the profit and loss statement is. What's the balance sheet? What's the cash flow? What are each line item on those things? And how is it that those line items can affect my business? And more importantly, where's my strengths and weaknesses? By looking at a cash flow statement. As far as I'm concerned, and in all of my history and knowledge, cash flow statement is one of the key things that really tells the tale on a business, and it really gives it its financial health. And for those of you who are listening, because, what I mean by cash flow isn't how much is left in your bank account, I can go spend that, because that's a great deal of chiropractic thought. In reality, that is not cash flow. Cash flow is getting the bank statement balance from your previous month and make sure that it's balanced. And then whatever that balance is, minus and adding all of the transactions during the course of that month and where that money went. And then what's your ending balance? So that's an important thing, because it's going to show you where your cash is going, and your cash can be very different than your profit and loss statement. And I don't mean to get really, I don't mean to sound like an accountant and get too tied up in all the specifics of this, but these are things that you should be focused on, especially at a year end and a beginning of a new year, because you can take a look back at the previous year and have a very good understanding of, hey, where's the positive, where's the negatives, and then start looking at the future or the next year on, hey, based on how I performed and based on what I'm seeing here, how is it that I can make adjustments in certain things in certain areas that will make the practice more healthier and put more money in my pocket. So those things to me is what every one of our chiropractors should be thinking about right now. And they should have a really good understanding. And if they don't, then need to get with the party that can assist them with that.
There was something early on when you first started in on that segment that you said was, and I wrote it down, was I wrote the word empowered. Mm-hmm. All right. Knowing your numbers empowers you, and the chiropractor in particular. So that's what this podcast is for the chiropractor. The chiropractor is actually empowered through those numbers, because you called them entrepreneurs. And I've always said, a chiropractor, when they graduate, they want to heal the world. They want to treat everybody, but ultimately they're going to be a business owner and they're going to be an entrepreneur. And I call them educated entrepreneurs, right? Just because you've got doctor in front of your name does not guarantee any form. You are not entitled to success. You're not entitled to prosperity. What you're entitled to or empowered for is an opportunity to be successful. But they are different, and it's empowering to me. I find it a form of freedom. That which would you rather be in right now in today's world, right, John? And I know your background is in healthcare. Which would you rather have, the freedom that comes from being an educated entrepreneur chiropractor, or would you want to be in that insurance model MD? Which one is more saddled? And the chiropractor has a lot more flexibility and freedom to be able to be private pay component and take that insurance saddle off of them, those restrictions, because if you're restricted, you don't necessarily control the end result of what you can expect month to month. And also, if you're an MD, you're typically in a lot of referral circles, specialist to specialist to specialist. Yes, you can speak to that. But a chiropractor is an educated entrepreneur, and you're going to have to generate that business, right? You're going to have to go out and impact that community. You're going to have to effectively communicate to that community, to engage with the community, get the new patients, and then what you do with those new patients once they come in, whether you retain them, what their experience is, how long that doctor-patient relationship is ultimately going to affect the business long term. And that can affect right into what you and I have talked about before on residual income and things of that nature. But anyway, when you said when you said they're entrepreneurs, that's where my brain went to. It was the fact that they're not constrained or restricted. They have opportunity to operate outside that insurance realm if they want to. But at the same time, they are entrepreneurs from the standpoint that they're going to have to generate that business. And knowing your numbers is intelligent going forward, because if you don't know your numbers, how are you going to operate when month to month it's up to you to generate the next month's business?
Yeah, there's a lot of even simple things that you can do to get a better understanding is take your average collections per month, take your average cost for staff and overhead, operating costs, and dwindle it down by patient visit. So in other words, you may be charging $65 a patient visit, but after your overhead and staff and everything included in that, when that patient walks in the door, they may actually only be worth $10 to you, right? Because you're charging $65, your overhead equates to a total of about $55 per patient visit. And so you know that patient coming in the door is worth $10 to you net profit, okay? That's your collections minus your overhead, that's your $10. So that's a simple way to at least try to budget and manage the business. And how many of those patients, being that they're worth $10 to you, do you have to see just to cover your monthly costs? So that to me is a simple way without getting into, don't get me wrong, I do believe you need to take the time to learn what a profit and loss statement is, a balance sheet, and cash flow. But if you can determine that, hey, I need 400 patient visits to break even, to cover my overhead, you know then going into next year that, hey, if I can get this many visits, or I could change my pricing formula or bring nutrition and other things in that take that $65 to $110, and then things change. But it's important to know at least one, what is the net profit? What is the actual benefit and revenue for me out of every patient that walks in the door? And then two, what are the patient visits necessary each month to cover all that, so that I know outside of that realm, there'll be specific things that will be profitable and how to take that. But, I do think it's also a great learning tool is to use your previous year's financial statements. You may have tax people you work with, a CPA, you may even have a bookkeeping service or someone on staff, but take a look at that and ask to get educated on it. I think that's an enormous important thing. Go through each line item, understand what this is and why. You'll learn a great deal about your business, I promise you, that you never knew before. You'll also get a great understanding that if you make certain adjustments in your expenses and in your collections, you could be enormously more profitable without costing money and changing things. So, and in addition, once you learn all that, you can start planning your future a little better. If your plans are going forward that you may want to, add a staff person, you may want to even eventually bring an associate or maybe a different service line or therapy or something of that nature. It's easier to do when you have an understanding where you are financially previously and where you are financially going forward. So learning all of those things and really taking the time to forecast and put a budget in place not only will help you get there, but it will help you have a much greater understanding and will also help you, let's face the fact, I know Dr. McMurtry and Tom talk about these things, but it's even harder these days with the economy the way it is, with staff, hourly wages, and things of that nature. You really need to start budgeting and understanding your finances so that you can successfully put in CA programs where they're compensated, that are beneficial, and that you can keep them for long term. Because there's a lot of change going out. If you look at small business around the country right now, there's one of the biggest concerns that the franchises, the chains, everybody's dealing with is getting good staff. Turnover. And that's an enormous problem now. So if you are fiscally smart and you understand your business, you can adapt to that way better, and you can put programs in place that keep staff happy, that are self-funding. So again, this all boils down to educating yourself on what your numbers are, what they mean, and how they can affect you going forward.
And that's some of the insight that you provide on a monthly basis.
I would say weekly. I do a lot of that with a number of our doctors. One, because they're just great people. They really realize that they want to see that change and they want to learn it. And quite honestly, it's not as hard. I think, people sometimes, or chiropractors more so, don't want to jump into this because they think it's hard or they're not equipped to understand it. And that's not true at all. I mean, it's hard to go through chiropractic school. So they know what they're doing and they're smart individuals. And this is just some other thing that can be taught. And it's not a very difficult thing to learn. And you'll realize that if someone's explaining it to you and walking through it with you, you'll get a really good understanding and it will really start to click. And you'll notice as an entrepreneur on a daily basis, weekly and monthly, you'll start thinking about what you've learned. And you'll start putting that in your head that, if I make that adjustment here, this could be better move for me as a business owner and for the practice overall. So yes, I would take the time to have those discussions with your coach or an outside party. And if you're an Align member, reach out to me. I'm happy to do that. We've done that with a number of members that have significantly made impact on their practices. And you know what, quite honestly, we built out budgets and formats and educational tools that align with the Align system. So it really works hand in hand. So I think it not only gives them the financial education that they need, but it will equate to how the system goes and how that is in everyday care plan and patient management.
I'm circling back here. A lot of good stuff he just covered there, folks. I mean, this is one to go back to the queue and re-listen to it because he's covering a lot of very key factors of how to operate a business long term. But like I said, I'm circling back. There was something that you said. It reminded me when you were talking about having to see a certain number of patient visits before you hit profit, and so on. I remember a good friend of ours, Dr. Todd Osborne, right? And he was on the phone with his CPA, and the CPA just had a way of putting things right, of conveying it, and he goes, "Okay, well, if I've got it right here, after 820 visits, you get to finally take something home." And it was Dr. Osborne said, "Well, wait. What did you just say?" He says, "Well, you work for free for the first 820 visits every month."
Yeah.
Now, if that doesn't get your attention as to what my overhead is and how can I contribute cash flow, how do I utilize that to either lower that, because there are ways to streamline, right? If you're paying attention, there's ways to lower that overhead because, you use the example of, if you're $65, charge $65 for a visit, that's your average, and your overhead's $55, then you're making $10. Well, there's ways to lower the 55, and there's two ways to make money in business, right, John? I mean, we can talk till the cows come home, but there's really two ways to make money. You either increase your revenue or you decrease your overhead. And it's really smart when you can do both, right? So I remember Dr. Osborne's jaw just dropped and went, and that's hard.
It's a lot.
When you hear I have to see 820 for free before I get to take, and go from eating, ramen noodles for Friday night versus having a filet on Friday night when it's all done is looking at that from that perspective. And that's a lot of pressure, by the way, John. I'd like to throw this back at you because that's pressure. If you're one of those practices out there listening to us, pay attention, because you figure that out. Figure out how many patient visits are you having to see before you get to take something home. And depending on the month that we're on, when we get to the end of the month, the 30th, the 31st, it rolls over to the 1st. And guess what happens? You start working for free again. It's all over. It's every 30. This cycle of pressure of being a business owner rolls over every 30 days. And with that overhead has to be covered again. And so what John's talking about, and I'll throw it back to you here in just a second, John. What John's talking about is knowing your numbers and creating a budget reduces that pressure. Now you tie that, what he's talking about, into what McMurtry and I talk about a lot, which is the AMC Align system. That system, and knowing those statistics, the system takes away from that pressure. In other words, getting to a point, I know we've covered on previous episodes, we got the producer Snacks in the studio with us today. He remembers when we talked about the fact of, multiple appointment calendars and knowing, your maintenance visits and building up that storehouse to where you can count on I know next month I'm going to have 800 maintenance visits. Well, if you had 800 maintenance visits coming in, that means any new business that's acquired during that business or that month is gonna be over and above whatever that overhead is. It takes pressure off running your practice, combining what John's talking about, budgeting and cash flow management, combining that with the foundation of a true system to where you can get to the end of the month and feel confident and go, oh, that's why Aligned says we teach, we're not, we're about increasing revenue and such. We are about building practices or growing practices, but our main focus is building self-sustaining, stress-free. All right, now how do you build a stress-free? You build it to where there is no stress in having pressure to produce a certain amount every month and not knowing where that's coming from. So the system allows for that. And then a smart business owner is going to be what John's talking about, which is knowing your budget. So I'm going to throw it back to you, John, of just when you know your numbers and you're creating that budget, there's ways to streamline and lower the cost while also increasing the revenue.
Yeah, go back on one thing. Just kind of want to make sure people know, or doctors know, this is available. Is, Tom mentioned stats, and so stats can play a big role in your budgeting and your forecasting and how your practice is performing. We actually built out a budget template for all of the Aligned doctors that is where they can use their stats that they provide each and every month to their coach in the budget template. So we built a Aligned system budget template that will allow you to plug in your number of new patients per month, your average monthly patient visits. You then plug in your percentage of care plan closing and things of that nature. You just plug in what your stats are that you provide your Aligned coach, and the budget template will forecast out automatically for you. And now, granted, there'll be some things you may want to tweak in that, but if you just take the time within the Aligned portal, there's a video that I did on using stats and plugging it into this budget template. It's a wonderful tool. It's got all the variables in it. So everything in yellow is a variable. So you can plug in your patient visits, you plug in your new patient number, your percentage care plan closing, whether it's 20% or 60% or higher, and it will help forecast that out for you. Some things that Tom's talking about for overhead, one of the things that's a real stickler to me is marketing. And because it's all over the place, and quite honestly, this is something that I've learned over the last several years, is everybody is an expert in marketing. And there are certain individuals and companies that do really well, and others maybe not so much. And it's hard to find the right marketing partner. But what I believe marketing should be, the cost of it at least, should be a percentage of your collections, not a fixed amount. Why do a contract with a marketing firm that's going to charge you $2,000 a month if you do $10,000 in collections? And should that same amount be if you do 20 or 30? Marketing should, and has always been, a percentage of your collections.
Correct.
So your expenditure each month for marketing should be anywhere between, in chiropractic, 2 to 7% of your collections. On average, I'm seeing 3 to 5 within chiropractic clinics. So your spend each month on marketing should be based on a percentage of your collections. I think that's one area that sometimes is overlooked, and maybe not enough is spent or too much is spent. So that's one area I think that really could be looked at. Staff is another thing. Staff is a big area that you should be able to easily, like I talked about before, what's your net value for every patient that comes in the door. You should actually also have, what does each doctor, if you have more than one in your clinic, or staff, what are they generating in collections for you? If you have 3 staff members and they're not generating a significant amount of collections for you in some way, whether it's nutrition or x-ray or a host of other things that your coach or Dr. Shannon or Tom can get real involved in, that is something to look at. You may be able to reduce one to part-time or actually be even more operationally streamlined with the 2 instead of 3. Or let me switch on that. If you have an understanding of your finances and you have a plan in place to add nutrition and diagnostics, bring in an individual who may cost you X number of dollars, but can gain tens of thousands in extra collections.
Correct.
So if you're smart and understand your dollars, those things are really good. And then I hate saying this because I hate the term retail, but when you have a clinic, you have square footage. If you're not utilizing that square footage where every square footage of your location is generating revenue, you're throwing money out the door. Could you have areas within there where you can see more patients or additional therapies or any host of things? I mean, if you have a 2,500 square foot clinic, but you're really only using 1,500 of it, you're losing money and you're spending money on space that should be generating collections and revenue. So those are just 3 areas. And then you can start to nitpick on every line item on your profit and loss if you really wanted to. But if you look at staff and marketing, as well as some additional other things, it could be 20% of your overhead right there, at least, maybe even more. So that's a significant area, in my opinion, to start. And then make sure that your own compensation is done appropriately. The doctor themselves should be getting a salary. They should be getting a salary. And what we're seeing, and that's appropriate within the IRS tax guidelines, could be anywhere between $35,000 and $65,000 a year. And that's just salary. So being on the payroll or gaining a salary. The rest of your income should come from the net profit of the business. And that has to do with understanding your financials, understanding your cash flow, and forecasting or budgeting for the next year. And by all means, if you understand your financials and you have, say, $20,000 net profit after the month of December, it doesn't mean you absorb all $20,000 of that. You have to leave some money in the business to grow, to adapt, to make changes, it's just healthy. So come up with a guideline for your own as a business owner and entrepreneur. What is it that, based on the net profit and the performance of the clinic, outside of my salary, what is a way for me to be smart in building my own income from it, but making sure that the practice stays healthy? Those are key areas in overall finance of the budget.
Well, let's not forget, because you don't know where the listener's coming from, so that you sometimes you and I take it for granted, thinking that everyone would understand this, but you're talking about cash flow, you're talking about salaries and so on, but also taking advantage of, if you don't know how to take advantage of proper write-offs, strategic write-offs, of strategic, whether it's amortization, financing, what's a qualified write-off, what are things that you could be running through the business, whether it be, health insurance, not malpractice, disability insurance, things of
401ks.
There's things that you could certainly that are write-offs that are advantageous. Let's not forget the fact that how many doctors do we know, John, are operating as a sole proprietor,
Yeah,
and they're not even incorporated.
Yeah,
right. So if you don't have that insight, we reach out. We'll give you the guidance and direction, but you need that because you're leaving money on the table that way. And I know you've got things that you can share. We've got a lot to share, but I just got to circle back to a couple of other things that you said as you were wrapping it up. Advertising. Marketing is a big place where a lot of doctors are wasting money. You use the term $2,000 a month. That's kind of something that you and I see on a regular basis, right?
Yep.
There's no way, if you're in a middle-sized town in Missouri, there's no way that you could spend $2,000 in targeted marketing in that middle-sized town. I know you've spoken on that before, but be aware, based off of your market, how much should be really expended and expected to spend. So there, you've seen it. There's a lot of doctors that are getting gouged by some of these companies because there's no way that you could possibly spend that in targeted social media marketing, for example, in any one area. Yeah. Last but not least, I'm going to throw it back to John here in a second. Jumping over, he was talking about staffing and the floor plans. I love that because that's, again, go back to your Align mentor, learn, especially you right starters that are out there, pay attention, laying out efficient floor plans to make sure the entire square footage is used, because that corner of your reception room that has a potted plant is costing you just as much as the space that's in the back that is functioning. So the smallest room, or one of the smallest rooms in your office, should be your reception room. But in most cases, where we find it, that's where the biggest wasted space is. But on staffing, some people don't know that there's a system there is a standard that's inside the Align system that tells you that when you're running efficiently, proficiently, productively, ultimately profitably in the Align system, there's standards that you can expect of how many patient visits you should be able to see with any one staff member. And I don't know if you even know this one, John, but inside AMC, you should be able to operate with one staff member up to about 120, 125 visits per week. Mm-hmm. A second staff member takes you for up to about 175 to 200, depending on what you're adding. And then so on it goes. And then obviously you're talking about adding those components. So I know I threw a lot back at you, but it was just, follow up to comments you made. Everything was spot on, but, the incorporating, the write-offs, knowing your numbers, making sure that you're spending wisely, right? And if you don't have that wisdom and you need counsel, that's what Align's for. So,
yeah, they're very valid points, and I'm not going to go into all the specifics on the marketing side because I'm not an expert in that field. I certainly know enough. But that is an area I see that is costly, and there's a lot of variables in it. And so just understand what you're getting into. But what I like most about the Align system is the self-referral and educating your clients or your patients to refer others, and having the patient orientation classes and going out into your community at different events, being involved in churches or charities, you have to work at it. Nothing comes handed to you. And when you work at things and do all these other things within the system, that's not costing you anything outside of your time. And I know time's valuable, but at the same time, you're more than likely to generate a lot more patients off of that than you will on Facebook, because it boils down to the credibility. And the doctor has the credibility. And if the doctor is seen in the community talking with individuals, sharing their knowledge, sharing what happens within their practice and their clinic, that's the credibility factor. You can't buy credibility on Facebook or these other areas. Why it's important for self-referrals and the patients that they serve, and why you can generate a lot more that way than you can through some of these others. And that to me is a very strong element of it, because individuals, people or patients go to credibility, or an individual's credibility. The company itself doesn't have the same credibility as the people behind it. So I do believe that's an important element of the system and what we're doing, and that can help on your overhead and costs, because they're not costing anything, and they can become lifelong or very, long-term patients and maintenance patients. So
right. Quality over quantity. And what's interesting is you can stack up all the resources that are inside Aligned that generate referrals or direct response type of new patients. And then you can compare them to the resources or the new patients, leads that are coming off of social media, for example. Well, they'll both match in quantity. They'll equal themselves if you're working it properly. But the quality that's coming from the direct referral, the like you said, the POC classes or the outreach, the health talks, things of that nature, you're going to get a better quality because you've got a relationship engagement there. There's a respect and value. So your quality goes through the roof, which also affects your retention. Listen, as you guys can tell, John and I could talk about this all day long, and we have. Maybe we need to go to Colhane's and have ourselves a harp sounding pretty good about now. But like we are up against the clock. John, will you come back sometime? And
anytime, yeah. And do encourage those who are involved with Align, go into our portal, take a look at the budget video and the template and everything that was built out. It does actually, believe it or not, it doesn't include the entire Align system. So when you get into patient visits over more than 100 a week, it will default that you need a new CA. Well, actually, we'll tell you that. So we put in all of those things that will really help guide you. So use the tools we have, use the staff and support that we have for this, because it won't take very long for you to get at least a good understanding, which will help you in the long run.
And invest in the resources that provide a return of investment.
Absolutely.
I mean, the CA coaching program, the nutritional coaching program, the Apex program, all of these things they're not there to feed Aligned. They're there to reinforce and build your practices and take you to a completely different level. So 2023 is laying pretty much in front of you. These resources are there. You have to engage with them, but those are not true expenses. Like if you added nutritional coaching, you and I sit here and know that's not an expense. Mm-hmm. It's an investment that's going to give you a return of investment within 30 to 60 days and then for the rest of your life.
Yeah.
So, like I said, we could talk about this all day long, but we're going to have to wrap this up. Hopefully, Dr. McMurtry can join us on the next podcast. But, John, I hope you'll come back. I know there's a lot more that we can cover. And until then, I hope you all have an abundant week. Live in abundance, walk in abundance, and serve well. God bless.
And one more thing before we go. If you're a chiropractor who's searching for a better way to build a more sustainable, low-stress practice, then you can contact us at amcfamily.com. You can schedule a discovery session, or you can access any of our free content, webinars, podcasts, and the like.